What's up, everyone? Hope you guys are all doing good. Now that you're done the theory video, and after, now that you're done the theory video and a couple long answer questions, right? You're almost at the finish line here, guys, okay? Right? So you're done the heavy lifting, right? And I know those questions seem like a lifetime, but now you're literally on the home stretch here with these multiple choice. Now, for these multiple choice questions, guys, remember that your exams will be 50 multiple choice. So this is just a quick little running start for our reviews, which will then feel like a marathon because they're just going to be very hard, okay? So needless to say, guys, let's go practice a couple multiple choice questions. That way we're a little less blindsided when we get to the reviews and we see all those really rough questions, okay? Now, remember, guys, for multiple choices, okay, it's very common to see something that you have not seen before just because there's so many ways questions can be asked, okay? So whenever you see a question, guys, always try to relate it back to something you have seen in our questions before, okay? And I guarantee you guys, like, you guys will have seen it before. I always say, if you try to make up new things in the exam, creative accountants end up in jail. So whenever you see something, try to relate it back to something you have seen before, okay? Always remember also, guys, in multiple choice questions, that there's one right answer, one almost right, and then 2 to 3 wrong answers. Okay, so always cross off what's wrong right off the bat. And then, guys, you're basically down to 50-50 shot. That's another trick for multiple choice, okay? Now that you understand that, guys, for these multiple choice questions, all right, because like I said, you've done the theory and previous long answers, try to at least attempt them on your own. Give it your best guess, make mistakes, learn and correct yourself. Remember, guys, for multiple choices, only one answer is right. The others are learning opportunities. And guys, with respect to the therapist, no one got anywhere by having good mental health, all right? Push yourself to the end and then celebrate afterwards, or see a therapist afterwards and recover. But regardless, guys, time to push through, okay? So pause the recording now and see if you can answer this first one, and then unpause, and then you'll listen to me explain. Okay, so for this first question here, now that I'm starting it, a cost that is associated with a particular product cannot be directly traced in an economical, feasible way is called what? Okay, so guys, a cost that cannot be directly traced, okay? So if it can't be directly traced, guys, what type of cost is it? Well, if it's not direct, right, because it's not direct, it must be indirect. Okay, so what's another word basically for an indirect cost? Okay, well, guys, an indirect cost is definitely not a direct cost. The next is an inventoriable cost. Well, guys, what is an inventoriable cost? Okay, because this is not something you have seen before, but something along the lines of what you have seen. Okay, now, guys, I'll tell you right now, inventory cost is just another word for product cost. Okay, and why is that, guys? Because as I went through the theory video, you may remember this from your notes. A product cost, right, your DM plus DL plus MOH, these become the cost of your inventory. These become the cost of your inventory when they are produced. Okay? They become the cost of your inventory when they are produced. Therefore, guys, product cost, since this is what becomes your inventory when it's produced, it's another word for inventory cost or inventoriable cost. So, guys, product cost and inventory cost is the exact same thing. Okay? So, guys, an indirect cost is not another word for a product cost, which, guys, makes this answer wrong too. And then, guys, by basically default, it's either D, MOH, or E, none of the above. And, guys, your indirect costs, right, are all the costs not directly involved in making your product. Therefore, it is overhead. Okay? So, guys, the answer required one is D. Okay, so costs not can be traced in an economically feasible way is overhead. Okay, guys, and economic feasibility is just a trap word. Okay, because, guys, in the real world now, okay, I don't want to over-explain it just because I don't want to confuse you guys. But with technology, a lot of days, even if a cost is indirect, with certain technology, you could actually trace it as if it is direct, especially with automation and all that stuff going on right now. Like, this is way above the scope of Com 305, but, like, depending on how big your pockets are, even though the cost is indirect, you could trace it like a direct cost if you spend enough money. That's all that is saying. But needless to say, guys, that's outside the scope of Com 305. For all intents and purposes, guys, if a cost is not direct, it is indirect. Okay, next. Bob Manufacturing currently produces, and I hope you pause before you start this one. Bob Manufacturing currently produces 1,000 tires per month. The following total manufacturing costs incurred at this level of activity are as follows. Okay, so guys, we see all our manufacturing costs, and then we see here the plant has a capacity for 3,000 tires. It's considering expanding production to 2,000 tires per month. What is the total production cost at producing the 2,000 tires? Okay, so guys, to understand this, okay, and really make sure you pause the recording in advance, okay, right? Really make sure you pause in advance, is because now we're finding the total production cost at 2,000 tires. Okay, now, why I'm asking you to pause in advance, because I want you to know what type of problem this is. And what type of problem it is, guys, it's a cost estimation question, where basically you have the one cost given to you at one level of activity, and they're now asking you the cost at different level of activity, right? So in the question, they give you the cost at 1,000 tires, but now you're finding the cost at 2,000 tires. Okay, so for that, guys, I want, like I said a couple of times, pause and think, what strategy are you going to use for this type of question? Okay, well, the answer to this, guys, is you're going to build your total cost equation. Now, you're going to find the total cost equation. You're going to build the total cost equation at 1,000 units, and then, guys, you're going to figure out the total cost at 2,000. Now, guys, for your total cost equation, it's the variable cost per unit times the number of units plus the total fixed cost. Okay? Now, guys, remember, we're going to find the variable cost per unit at 1,000 units and the fixed cost. Remember, and always, guys, I'll say it like this. You build the total cost equation based on the original information in the question. So based on question. And then afterwards, guys, your number of units, that's where we're going to plug in 2,000. Okay? We're going to plug in 2,000 afterwards, and then we'll be able to figure out the total cost. Okay? So you figure out the VC per unit based on the original information and the fixed cost based on the original information in the question. Then all we have to do is plug in 2,000 into our total cost equation, and then we'll figure out what the total cost is, okay? Because always remember, guys, you figure out these two components of the total cost equation, and then all you have to do is plug in your new number of units, which is always given to you, okay? So let's get after it now. So first off, what is going to be the variable cost per unit? Okay, well, our variable cost per unit, okay, is all our variable costs together divided by the number of units. So total VC. And our total variable cost, guys, is going to be the DM of 20,000 plus the DL of 3,000 plus the VOH of 6,000. Okay, these are all our variable costs here. Okay, we have no variable selling costs, guys. We're only concerned with variable manufacturing. Okay, because they only give you variable manufacturing costs here, guys. All right, now, if you're wondering, DM is variable because the more you want to make, the more material you need. DL is variable because the more you want to make, the more labor you'll need. And variable overhead's variable because it literally has the name variable in it. So your total variable cost, guys, is going to be 29,000. And then, guys, you take your total VC and you divide by the number of units, which, guys, to get these costs, right, you make 1,000 tires. So 29,000 divided by 1,000 gives you a VC per unit of $29. Okay, guys? So whether you make 1 unit, 2 units, any amount of units within the capacity, so within the relevant range, okay? Any amount within this range, okay? Your variable cost will be $29. Okay, guys? All right, I hope that is okay with everyone. Okay, if they ask you what's the cost at 4,000 tires, that's not possible because it's outside the range. Just so you guys understand. So even though this is not a high-low method question, guys, like, you can't go above your capacity, right? I want you guys to see that here, okay? I'm not saying the relevant range is 1,000 to 3,000. I'm not saying that, guys. I'm saying it could be anywhere between, because this is not a relevant range question, guys. What I'm trying to say here, I'm kind of over-explaining right now. But I'm just trying to say, guys, like, you can't figure out a cost above 3,000, okay? So basically, guys, your variable cost per unit is 29, because if you really were to go relevant range here, guys, technically a relevant range for this business is anywhere 0 to 3,000. Okay, because our max capacity is 3, so we can have any demand between 0 and 3,000 and be okay. But needless to say, guys, it's not a high-low method question. Okay, I don't want to confuse you. Okay, that's the one of the downsides when you're recording by yourself. You sometimes go on tangents. Okay, anyways, your variable cost per unit, it is 29. Okay, so anywhere between 0 and 3,000 units, it's $29. Okay, now your total fixed cost, guys, that's only the fixed overhead of 10,000. And now, guys, you're ready for your total cost equation. So your total cost, guys, is the variable cost per unit 29 times the number of units plus the total fixed cost of 10,000. Okay, now, guys, remember the number of units. This is what you plug in based on the question, right? We always figure out the variable cost per unit because that never changes, and the total fixed cost, that never changes. And all you have to do, guys, is plug in your new number of units and you're set. So your total cost is 29 times 2,000 units because they're asking you for the cost at 2,000 tires, plus the fixed cost, because that never changes based on the amount you produce. So your total cost is going to be Let's see here. My solution. Your variable cost is going to be 58,000. Your fixed cost is 10,000. So your total cost is 68,000. So the answer is C. Okay, I hope that's good with everyone. If you ever have any questions, let me know. Now for 3, please pause. And welcome back. So guys, if the level of activity increases, what will happen? Okay, to the variable cost, fixed cost, even the variable cost per unit and the fixed cost per unit, okay? For that, guys, I need you to remember your theory video, guys. Okay, so remember, the VC per unit. Does this cost ever change? No. Okay, but the total VC, does that change? Yes. I'll put change question mark. Okay, so guys, remember, VC per unit, think about the rate per hour. Every hour you work, your wage is not going to change. Okay, so remember, guys, whether you work 1 hour, 2 hours, 3 hours, you're still paid $15 per hour, right? That's the VC per unit. But guys, in total, right, if you work 1 hour, well, in total you make 15 bucks. But now if you work 2 hours, you make 30, because $15 an hour times 2 hours. Or if you work 3 hours, now you make 45. So the VC per unit, guys, does not change, but the total VC does. Now, for the fixed cost per unit, okay, remember, guys, your fixed cost per unit does change. Remember the concept with economies of scale, right? The more you produce, right, the cheaper it is for every single unit, guys. Remember the example with rent, okay? Whether if you have one roommate, okay, one roommate, your rent's $1,000. Now, if you have 2 roommates, okay, now your rent goes from $1,000, right, to $500 because you're splitting it with someone. Then if it's 3, it's $333.33, right? You're basically dividing it by the number of units, right? Because fixed cost, guys, right, the fixed cost per unit scales inversely with activity, right? Because the more you make, the less it's going to cost you because you're basically getting more value out of that unit. Okay, remember the example with rent. Like I said, the more people you shove in that apartment, the cheaper it is per unit because you're splitting the cost amongst more. Okay? Whereas the fixed cost in total FC, it does not change, right? So even though you're splitting the rent with like 2 or 3 people, okay, your fixed cost, right, it's still $1,000 per month. That is not changing, okay? So if your activity goes up, guys, is your variable cost per unit going to change, right? So guys, imagine you work more hours and your rate goes up per hour. That makes no sense, right? You're paid the same amount per hour no matter how many hours you work. Now, guys, if your activity goes up, your fixed cost per unit and total variable cost, is that going to go up? Well, guys, the variable cost will go up if your activity goes up, right? Because if you're making more, there's going to be more variable cost. But guys, will your fixed cost per unit go up if you make more? The answer is no. It's actually going to go down, right? Remember, you get more people in the apartment, the cheaper the rent is for you per month on a per unit basis, okay? So guys, the fixed cost per unit will actually decrease the more you make. So it's not going to go up, therefore it's the wrong answer. Okay, all right, here, FC goes down. Goes down, goes down if activity goes up. Now, the total cost will increase and the fixed cost per unit will decrease. Okay, guys, in my opinion, that is the answer. Okay, now, maybe you're wondering, why is that it? Why that is? Well, guys, think about it. Your total cost is your variable cost plus your fixed cost, right? Now, if your activity goes up, do you agree that that means if activity up, it goes up? Okay, that means the variable cost is going to go up, right? But the fixed cost will remain unchanged, right? So if your activity goes up, your variable cost in total, your TVC, is going to go up, and your total fixed cost will not change. So overall, guys, if the fixed cost doesn't move, but the variable cost goes up, the answer is your total cost will go up, right? Because the variable cost is going up, so overall, it will go up. Okay, now, if the overall cost is going up, remember, guys, your activity, what happens to the fixed cost per unit? Well, it's going to go down, right? Because the more roommates you pack into the apartment, the cheaper it is per unit. Remember, guys, okay? And I'll show it here with the example. Your fixed cost in total, it's $1,000. No matter how many units you produce, that's the example with rent, but it's going to be $500 a month for one roommate. If you live on your own, it's $1,000 a month. If you live with 2, it's now $500 a month. If you live with 3 people, it's now $333 because you're basically taking the total cost and you're dividing it by the number of units, right? So the more units you make, the more you spread the cost amongst the number of people that are dealing with that fixed cost, right? Right? You spread it out, so it goes down. It is an inverse relationship, okay? Now, so the answer is C, and guys, the variable cost per unit does not change, but the total cost will increase. Okay, so the total cost increase is correct. Okay, guys, and it's not none of the above because the answer is C. So I hope that makes sense to everyone. Let me know if you have any questions. This is very important for the exam, guys. Okay, you have to understand what happens when activity goes up. Okay, this relationship here is very important, what we went over in the theory video. Okay, now which of the following is a variable cost? So guys, always remember, and I hope you pause in advance, your variable cost, always pause, guys, before every question. I don't want to say this going forward, like it's going to be very tedious to say in the video, but please make sure you pause. Okay, now, which of the following is a variable cost? Okay, well, guys, a variable cost is a cost that changes based on output. So you have to think, if I make more or less, will this cost change? Guys, rent, is that variable? No, it's fixed. It stays the same amount per month. A president's salary, it is not variable. It is a fixed cost, guys. A president or a CEO, CFO, they aren't paid per hour. They have a salary. What a salary is, guys, it's a fixed amount, usually, backed by a contract. It's a fixed amount backed by a contract that tells you how much you're paid every year. So a salary, guys, salary is a fixed cost. Okay, so this next one, sales commissions, in my opinion, guys, that is variable because a sales commission is the amount that you pay your employee after every sale. So guys, that's going to change based on the number you sell, right? So sales commissions is a variable cost because the more you sell, the more that cost is going to change, the more you'll have to pay your employee. So that's going to vary based on units sold. And guys, that's the core of what a variable cost is. A variable cost is a cost that changes on output, which is based on the amount you produce and sell. Okay, that's what makes a cost variable. It's based on the output, how much you produce and sell. So sales commissions is variable. And maybe you're wondering, Matthew, taxes seem like a variable concept to me, right? Taxes, seems variable, right? We're always paying different taxes every year. So maybe at the top of your head, you're thinking it's variable. But for that, guys, I'll relate it back to COM 305. Okay, right? A variable cost is a cost that changes based on output. So you may think that property tax is variable, guys, but I'll tell you, if you ever looked at a municipal tax bill, okay, which is very depressing, okay? Hate paying my property tax on my condo. Because, guys, a property tax, all right, it's based on the square footage. And, guys, unless your condo or house expands or contracts based on the day, I mean, I wouldn't mind my condo expanding, not gonna lie, but contract, hell no. Okay, I'm in a one-bedroom. I'm telling you right now, guys, property tax, okay, is a fixed cost because the square footage of your condo ain't moving, okay? And for the last one, amortization, guys, amortization is just another word for depreciation. Okay, depreciation. And guys, I'm gonna tell you right now, for COM 305, for all intents and purposes, depreciation is done on a straight line basis. Straight line. Okay, straight line basis, which basically means same amount yearly. Okay, so maybe guys in COM 217 you learned different depreciation methods. Okay, like I believe it's been a while since I've done COM 217, a good 7-8 years at this point. But literally, guys, I think there's straight line, double decline, and then units of depreciation. I think those are the three methods you learn, at least what I remember back in the day. But for all intents and purposes, guys, COM 305, whenever there's depreciation, it's straight line. And straight line means the same amount per year. And guys, if you're depreciating the same amount per year until the asset is done, is still no longer in use, it is fixed, right? Because fixed just means the same amount per year. Okay, so it's wrong. So guys, whenever you see depreciation or amortization, you assume straight line. Okay, next question, guys. So pause and see if you get through 5 and 6 on your own. Okay, next. So Bobco manufactures wood file cabinets. The following is available for June 2026. Okay, so guys, looking here, look at required 5. So remember, guys, even though there's something that we could do our income statements with, remember, guys, that doing the whole statement is not practical. Okay, doing the whole statement is not practical. Just pick what we need. Now, the first thing it's asking us is for the direct manufacturing costs. So guys, what are our direct manufacturing costs? That's our DM used plus our DL. Guys, direct manufacturing costs, if you don't know, it's another word for prime costs. Okay, your DM used plus your DL, it's the same thing as the prime cost. Okay, so let's get after it. Now, our prime cost, DM used plus DL. Okay, now our DL, guys, do we have it given to us? So let's go read through the question. Or DM, do we have that given? Now, Bobco manufactures wood file cabinets. The following information is available for June 2026. Okay, so guys, we see your raw materials beginning and end, and then we see WIP beginning and end, finished goods beginning and end. Then we see direct labor wage rate $9.60 per hour, and direct labor hours work 1,500. So guys, they give you the rate per hour and the number of hours. So you guys think it's possible to figure out the amount you paid your direct labor worker? The answer is yes, very simply, guys. And we've all calculated our rate per hour, right? I hope everyone's worked a part-time job at some point. and you calculate what's your pay. It's the amount of hours you work times the amount you're paid per hour. So for DL, guys, they didn't give you the total, but they gave you a way to calculate it. Because remember, guys, your DL cost, right? How do I calculate the cost you pay a worker? It's the rate times hours worked, right? So for your DL cost, if you pay your employee $9.60 an hour and they work 1,500 hours, that's going to be your cost of labor. Now, for the DM used, okay, we don't really have that given to us, but they do give us the raw materials purchased in the beginning. Sorry, they give us the raw materials purchased. They use the beginning raw material and the ending raw material, okay? But for now, guys, and this is maybe a mistake that you made, and I'm going to go do it right now because this is something that we actually learn more in chapter 3. So I'm going to show you a trick right now. We haven't gone through it, so this is the type of mistake that I'm going to show you. This is a mistake that's good because this is a learning opportunity, okay? This is not a reason to get a therapist. So first off, for your DM use, maybe you guys did this. Your beginning raw material of 6,000 plus your purchases of raw material, which is 21,000, minus your ending raw material, which is 7,500. That will give you raw material used. That will give you raw material used of 19,500. Okay? So, guys, maybe you're thinking, well, my raw material must be my direct material. And the answer to that, guys, is no. And this is more of a concept that you will learn in chapter 3. Where, guys, raw materials, there's actually two components to your raw materials, guys. The first is obviously DM used, and the second is your IM used. Now, guys, your IM used is part of MOH, okay? So it's not direct material. So what you need to look for in questions, guys, okay? And this is something I want you to really understand. You'll learn this a little bit more in chapter 3, but this is what you guys need to know. RM used and DM used are not the same. So I'm going to put a little slash through this, are not the same. But there is one exception. Unless no IM mentioned. So if there's no indirect material mentioned in the question, it's basically like saying IM is 0. So guys, whenever raw material is given to you, okay, you actually have to adapt your COGM schedule. Okay, and this is where it starts to get hard. So basically, guys, in your notes, you can go fix up your notes a bit. This is your schedule for RM used, okay? Now, how do we find DM used for RM used? Well, guys, you take your RM used, you minus the indirect material used, and that basically shows whatever's left over is direct material, right? Because in your RM, right, there is DM used and IM used. So, guys, in this case here, if we know RM, the total is 19,500, if no indirect materials is mentioned, well, then we're safe. But in this question, guys, we're going to go read through it. I know it because I made the question that there is going to be indirect material here. Okay, now look here, guys. In your manufacturing overhead, you have $9,600. $2,000 is indirect. So, guys, if in your raw materials, $2,000 of it is indirect, that means, guys, the remaining is the X, which is direct. So that's going to be 17,500. That is your direct material, guys, because whatever is not direct is indirect and vice versa. So whatever is not indirect here means our direct material is 17,500. So that's a very tricky part about the course, guys, when they start mixing in indirect materials here, okay? So you have to be very careful about that in chapter 2, and we're going to go over that more in chapter 3 as well, okay, guys? Because always remember, your raw materials has two types. There's two types of raw material in this course. There's DM and IM. So always, guys, if you see direct material, you're fine. You don't need to worry. But if you ever see raw materials in the questions, guys, you have to make sure to separate the indirect material from the direct. Okay, that was the trick here. So, guys, 17,500 plus 9.6 times 1,500. That gives you, let's see here. So let's just go break it up individually. So prime cost. So your prime cost is going to be 17,500 plus 14,400. So your prime cost is going to be 31,900, which is the same thing as direct cost. 31,900. So the answer is E, none of the above. Okay. Now, what is the prime cost and conversion cost respectively? Well, our prime cost is 31,900. Now, how do we get conversion cost? So prime 900 conversion. Let's go figure out. It's DL plus MOH. So our DL is 14,400, I believe, or was it 14,400? 14,400, yeah, good. And then, guys, our overhead is 9,600. Okay, 9,600, that's the total cost of overhead. The $2,000 is already included, guys. You do not need to add that back, okay? Because, guys, it's literally already part of it, so always be careful, guys, about the wording. 2,000 is already included. 2,000 is included in the indirect, in the overhead, all right? So you don't need to add any extra. So 9,600. So your total conversion cost, guys, is going to be 24,000. So, guys, your prime is 31.9. Your conversion is 24. The answer is here. Let's see. Prime 31.9, conversion 24. The answer is B. Okay, 31,900 and 24,000. All right, I hope that is okay with everyone. If you have any questions, guys, do not be shy to let me know. Okay, now, next up here. Okay, prime cost, conversion cost, good. Okay, now, going through this next one, guys, I hope you pause and you solve in advance. Okay, like I said, guys, I really hope you solve in advance. Now, going through this, following information relates to Bob maintenance costs. So we see activity level, total cost. Bob expects activity to increase to 1,200 units next month. Calculate the cost behavior. So guys, look at this question here. It looks like it's a high-low method, right? Because you have your activity, you have your cost. Now remember, guys, what does the high-low method do? It allows you to find the variable cost, or sorry, the cost of anything, cost within relevant range. Now look at this, guys. They're asking you the cost at 1,200. Is that within your relevant range? Is it? Is 1,200 between a range of 400 and 800 units? The answer is no, so the answer is none of the above. You cannot solve it, okay? Now, for fun, guys, because nothing obviously is more fun than this, all right, just to prove you understand the high-low method in terms of calculation, I'm going to put an answer on your screen. I would like you to pause right now, but just solve for fun. Just prove to me, because nothing's more fun than 305, show me you can solve the VC per unit and then the total fixed cost, right? Kind of like what we did in our last long answer question for the high-low method, all right? So question 3, really see, guys, if you know how to solve the VC per unit and the total fixed cost, all right? Challenge yourself, see if you could do it. Pause, because I'm about to give it to you now. Your VC per unit, right? You should be able to get 0.625. That's your variable cost per unit. And then, guys, show that you know how to solve for the total fixed cost, okay? It should get you 350. All right, I'm not going to show you how to do it. Just see if you can do it. If you can't, revisit the long answer question from the problem video and make sure you understand it, guys, because there's always a few high-low method questions on your multiple choice exam. Okay, next. All right, and then if you want, you can guess the cost in the relevant range. Let's just say 750. Okay, and we could do that. I'll do that right now for you guys. So we're going to take 750. Let me just go on my Excel. So 750 units. If you're trying to find the cost of 750 units, you do 750 times the variable cost per unit. That will give you a total variable cost of 468.75. So this is the cost 750 units. Then you add the fixed cost of 350. So all your variable cost plus your fixed cost. Let me just add those two. 468.75 plus 350. So if you were to guess the cost at 750 units, you would get a total cost of 818.75. So you can always guess the cost, guys, within the range. You cannot guess the cost outside of the range. Okay, so the answer is still none of the above. I was just giving you some extra stuff just to practice. Okay, now for question 8. Bob Manufacturing incurred total cost of 500,000. Manufacturing overhead was 100,000. Conversion costs are 30% of total manufacturing costs, and prime costs are 80% of total manufacturing costs. What is the amount of direct materials incurred? Okay, so guys, very tough question here, and there's usually one question like this on the exam that's just very algebra heavy. Okay, very algebra heavy. So going through this here, guys. Okay, let's go break this down. Now, whenever they give you percentages, guys, okay, it's always important to remember to figure out this percentage is of what amount, okay? So basically, guys, they're telling you your TMC is 500,000, okay? They're telling you your TMC is 500,000. Now, first thing here, guys, is that conversion cost is 30% of TMC and prime cost is 80% of the total manufacturing cost, okay? So your prime cost is going to be 500,000 times 80%. Okay. 500,000 times 80%, what does that give you? Let me see here. So if I do 500,000 times 80%, that gives you 400,000. And then your conversion cost is times 30%. And that's going to be, let's see here, 150,000, I believe. Okay, 150,000. There we go. Okay, now, we're kind of still screwed here a bit, guys. Okay, well, actually, manufacturing overhead's 100,000. Okay, so we'll use that in a bit. So basically, guys, we know that MOH is 100,000. Conversion cost is 150, and prime is 400. Now, the question is asking us for direct materials, okay? Now, looking at this, guys, we understand our TMC is our DM plus our DL plus our MOH. Now, if our TMC is 500,000 and our MOH is 100,000, okay, we know that our DM and DL is 400, okay, but here's the issue. We know the combo of DM and DL is 400 because of the prime cost, right? But now we need to figure out, how do I separate the direct labor? How do I figure out direct labor on its own? That way I have one X value, okay? Because guys, plus X plus 100,000, I'll say it like this, Y, let's put this as a different number, Y equals 100,000, okay? Now, because we don't know direct labor, okay, we basically have to look at other stuff that's given in the question and see if it can help us find that missing value. Now, we do know overhead is given to us, okay? Because the same way, guys, that I spoke about the prime cost, right? Remember the left-hand side of the total manufacturing cost equation is prime, and the right-hand side is conversion? Well, guys, the left-hand side we don't really know, but we do know, guys, that the right-hand side, all right, is equal to 150, right? So, guys, by putting out the total manufacturing cost equation, understanding that the right-hand side is prime, we know that the total right-hand side is equal to 150,000. So, guys, if your MOH is 100,000 and your conversion cost is 150, do you think there's a way to figure out the DL cost? Yes, it's going to be $50,000. Now, guys, all you're missing is one X value now, right? So you don't know the DM used. You do know your DL is 50,000 because MOH plus the DL is what gives you a total conversion. And then you know your overhead's 100. So guys, if your total manufacturing cost is 500,000, okay, and then your DL plus MOH is 150, what is the DM used? Well, just solve for algebra, bring these over and flip the sign. Because, you know, guys, when it carries to the other side, it becomes a negative. So your DM used, guys, is going to be 350. So that is the answer to question 8. 350,000. Okay, guys, so always write out everything that's given to you. Put your statement out or your equation, guys, because you could have done it like a statement, right? Because your DM used plus DL plus MOH gives you your TMC. And you could have done it like that. I just took the statement and rather than putting it vertically, I just put horizontally as an equation. That's the only difference. Okay? Now, questions 9 and 10, guys. Typical income statement question style here. Okay? Now, this is very similar, guys, to the skills that we would have used in question 1 of the long answers, right? Whereas, guys, when you go through these types of questions, if you look at it here, okay, before you pause and go read through it, right, you see everything broken up as different types of costs, right? So really, guys, the hard part, because you're going to be thinking, well, Matthew, the hard part is product versus period. Well, technically, guys, that is the hard part because that's even what the question asks. But, guys, that's not really the battle here, okay? It's not really product versus period, guys, because in your product cost, when you have your DM used, your DL, and your MOH, the DM and DL, guys, is very obviously given to you, right? It's very obvious. Like what we did in question 1. It was obvious. The hard part, guys, is figuring out if it's MOH or period, okay? That is the battle in these chapter 2 questions when you basically have to differentiate between product and period cost. DM and DL are usually just given to you very obviously, guys. It's actually the MOH versus period. Because, guys, if it's MOH or period cost, it's indirect, right? It's not directly involved in production. But then, guys, if it's not directly involved, is it related to selling or is it related to making, right? So if it's an indirect cost, you then need to figure out, is this a selling cost or is it a production cost, all right, if it's indirect? Because period costs and overhead costs, they're very similar, right? You just need to figure out whether the cost applies to production or if it applies to selling. Now, guys, for that, you need to know the trick. If you see factory, you know it's a product cost and it'll fall under MOH. Whereas if you see store, or office, you know that, guys, you make things out of a factory, sell things out of a store, it's a period cost. And then it's going to be a period expense. Okay? So let's go through this now, guys. And for our product costs, okay, just remember, guys, when I ask for product costs, that's basically asking you for TMC. Okay? So let's go figure everything out here. So I'm going to write DM used plus DL plus MOH. That gives me TMC. Okay? And then, guys, we'll add up our period costs afterwards over here. Well, actually, you know what? Let's do it like this. So, guys, TMC. And for these types of questions, I'm going to tell you right now, we're basically going to build two columns, okay? I'm going to put MOH in one column, and I'm going to put period in the other, and we're going to go through each cost, okay? So, guys, whenever you have a type of question like this, ask you for product versus period, I literally want you to make two columns, and I want you to see what it goes in, okay? So let's go one by one, guys. Let's see if it's DM and DL, or if it's an indirect cost. Let's see if it falls under production for overhead, product, CT, I can't spell today, or selling, which is period. Okay? Now, amortization of office equipment, guys. So depreciation of the office equipment. So I'm going to put here depreciation, office. Okay, guys, what do you think? That's product or period? Well, guys, if you see office, it is period. I hope at this point, guys, by the way, you solve the whole thing. You pause and you go. Amortization of manufacturing. So depreciation, I'm going to put here MFG, that's manufacturing. And guys, since it's related to production, it's a product cost. Okay, next, we have direct manufacturing labor. Guys, that's just another word for direct labor, 160. DM used, 126. You guys see here, I don't just make these questions just to reinforce what I'm saying. This is literally what it's like. It's going to be like in the reviews and on your exam, right? You literally do your two columns of MOH and period. You fight it out to figure out which column it falls under. And then DM and DL is just very obvious. Okay, now, finished goods beginning and ending. Well, we're not really concerned with that now. Maybe we'll use it later. Okay. Next, general office. Guys, GO, general office costs. Okay, guys, that is a period cost. Okay, that's not related to production. Remember, you make things at a factory and you sell things out of your store or office. Okay, guys, now indirect labor, IL. Guys, indirect manufacturing labor, okay, MOH. Guys, we know indirect labor falls under MOH. And indirect material, the next line, it falls under MOH, right? We should know this right off the bat. IM and IL, they are overhead costs. Now, guys, marketing distribution. Guys, marketing, MD, I'm just abbreviating here, guys. MD, okay? Marketing distribution, that's obviously a period cost, okay? Because it's selling, okay? Marketing is correlated to selling. Okay, now, next one, miscellaneous plant overhead. Okay, guys, now remember, what is another word for a plant? A factory. So PO, plant overhead, that is 30,800. Okay, so plant overhead, plant is just another word for factory. Plant utilities, PU, okay, that's 9,006. Oh, sorry, wait, oops, did I read the wrong number? Plant overhead, oops, 45,000. Okay, plant overhead, 30,800. Did I read any other wrong numbers? Now I'm paranoid. 101,800, 62, 28, 10, 45. Now I'm going to check. Now, let me check my other numbers very quickly. Let me do a quick check. 24,000 there. Okay. Just double check how I got the 24,000. There you go. That's good. I think the earlier part is good. At least I would like to hope. Yeah, I know it's good. I checked it. Okay, I checked. I was careful. No one stupid mistake. Now I'm questioning everything. Okay, 45,000. Okay, that is your miscellaneous overhead. Plant overhead. Now 30,800 is your plant utilities. That's another word for factory. And then you see property taxes on the plant. So plant taxes, that's factory, 9,600. So it's MOH. Now property taxes, I'll put here property taxes plant. Property taxes, was this here? Property taxes, was it company vehicle? So right here, CV, property taxes on salesperson company vehicle. So guys, that is a period cost. Okay. And then, guys, beginning WIP, ending WIP, I don't really care about that. So, guys, my total of MOH and my total period costs, my total overhead, 263,400. And then for period, it's going to be 157,400. Oh, sorry, 157, not 400. 157,000. Okay? So I hope that is okay with everyone. That's the total MOH, so 263, 400, and you add up 126 plus 160 plus 263, 400. That gives you a total manufacturing cost of 549, 400. And then for your period cost, it's going to be 157. So 549, 400. And then, was it 157? The answer is A. Okay, now for number 10 and our last question of the day, guys. So please pause and do this on your own if you're at this point here. How do we figure out cost of goods sold? Okay, well, guys, hope you pause and you're back now. For your cost of goods sold, you're taking your beginning finished goods plus your COGM minus your ending finished goods. That's what gives you your cost of goods sold. Okay, that's what gives you cost of goods sold. Now, for our cost of goods sold, our beginning finished goods is 180,000. That's right over here. Our ending finished goods is 170,000. But now, guys, we don't have the COGM given to us. So how do we get the cost of goods manufactured? Okay, how do you get it? Well, guys, maybe do your COGM schedule. So we have TMC. Now, all we have to do is add our beginning work in process minus our ending work in process. And that's what gives us our cost of goods manufactured. Because remember, guys, your total manufacturing cost is everything that you spent this period. Then you add your beginning WIP, which is all the DM, DL, and MOH from last period. Then you minus the EWIP, which is basically all the stuff, all the DM, DL, and MOH that was from jobs or, products that were not finished. Because your ending WIP is your ending work, right? It's the stuff you worked on it, but not enough to complete it. Okay, so that's what ending WIP is. You'll learn it more in chapter 3. But your ending WIP, guys, is all the money you spent on products that were still not done. So we take all the beginning WIP, we had all the costs from the BWIP, all the costs from the jobs that were not done, and the difference between everything we spent now, all the beginning costs minus all the ending costs, right? That disparity will tell us our cost of goods manufactured, right? So basically, guys, if you add the BWIP, this gives you your total WIP. So, guys, the difference between the total cost that went in and the leftovers, right? So if something left WIP, that's what makes it manufactured, right? So your cost of goods manufactured is whatever left work in process. So that's the difference between the total WIP and the ending WIP. That's why, guys, the statement's structured like this, but I don't want to over explain here. So and guys, just to let you know, because on the topic of total WIP, you don't really need it, total WIP, in the statement. You'll only write your total work in process like we did in theory video if it asks of you. But guys, in multiple choice, I just recommend you take the BWIP minus the EWIP because, guys, total WIP is kind of like a useless line. So your BWIP is going to be 46,800. Your ending WIP is 57,000. That will give you a cost of goods manufactured of 539,200, which you plug over here. You cross the bridge. 539,200. And then, guys, that will give you cost of goods sold of 549,200. So the answer is none of the above. Okay, guys, and that is it for the multiple choice questions. So I hope you guys all enjoyed the video. If you ever have any questions, please let me know. Okay, and I will see you in the next one. Okay, keep me posted if you ever need anything. Okay, all right, keep hope alive. Bye.